Welcome back to BLOCKTV. It's time now for Cryptonomics. And in the wild west that is the crypto space, we're constantly looking for oracles who can come out to predict the market correctly. While many try, few succeed, and we turn now to a man with an impeccable track record of solid predictions. The one and only Joel Kruger, currency strategist at the LMAX Group. Joel, thanks so much for being with us.
Good to be here, Asher.
All right, Joel, to kick us off this week, let's take a little bit of a look at the roller coaster ride that has been Bitcoin's movement over the last few days, weeks, what have you. It's cracked the $10,000 mark briefly yesterday, although as we film this currently, the prime coin is sitting well below 10,000, around 9,800 or so. Joel, what do you make of all this current movement, and is there sort of any truth that can be seen through the charts?
Yeah, I think we can get a good indication here. We've seen a nice run up in early 2020 off of a pullback that we'd seen late 2019. We've seen that the story is gaining traction, a compelling story that is Bitcoin at a time when Bitcoin should become increasingly attractive over the medium to longer term as market participants realize that we're in a global environment where interest rates are set to at just over at or below zero on the interest rate band, and where global equities have extended to the point where maybe they go higher, but when that kind of falls out, there's going to be a situation where people are going to be looking for yield, and it can't only be gold, and Bitcoin does become an interesting and compelling option when you're looking at a decentralized limited supply asset. And so we've seen that demand and that story pick up as we see in the ecosystem, things continue to be built out, and we're continuing to move in the right direction there. Now, technically speaking, things like to move in measured moves and in paces, and things don't like to get extended too much. And so we've seen a nice run up over the past few weeks. In January, a good run up into February. At this stage in the game, once we've taken out now 10,000, the market is looking a little bit tired, and I wouldn't be surprised at all to see us start to find resistance. And you can see we've run up above 10,000 and up towards the next key resistance, which is that October 2019 high at around 10,400. And so I suspect we could see a little bit of profit taking in here.
Certainly perhaps a chance for profit taking and some resistance being built. I mean, that seems to be what we're playing with at the moment. But if we even just look at yesterday, for example, that we saw that incredible, or early morning, this morning, depending where you are in the world, that incredible dip that occurred in Bitcoin, where in a matter of seconds, $300 was wiped off the value of the coin. Now, I draw up this particular example as just a question to ask you, Joel. I mean, seeing moves like that in such short-term dips, there was a recovery. It did generally pull back, although it hasn't been able to re-break that $10,000 mark. I wonder, is Bitcoin mature enough, seen as mature enough? Does the narrative play out strongly enough to really say that it's going to be that global hedge, that global, sort of safety, flight to safety that so many inside the market want to be built in terms of narrative?
So I believe it does. And again, I think it's a thing that we need to give time. It can't be this expectation that things are going to happen today or tomorrow. But I think that all of the necessary things are happening that are setting the stage for that to be the case. Now, when you talk about volatility of a $300 move up and down in Bitcoin, if you look at the price of Bitcoin over the past decade and since the existence and the inception of Bitcoin, we've seen tremendous volatility in this market. So a move of $300 up and down is not something that should be any concern as far as volatility relative to Bitcoin goes. I think that the important thing to pay attention to when you're looking at Bitcoin is that overall, on a broad stroke basis, the technicals are making sense, that we continue to see increased volume in the market. And the more volume we get, the more credibility these technicals give us. And I think we're already there. And so long as the market pretty much adheres to the bigger technical picture and remains kind of respectful of levels and kind of moves along with those ideas of where we look to expect things to kind of move along with the lines with a chart, then that's going to be there. And we are seeing that. So, for example, the market has broken up above 10,000. The market the other month had traded up to 9,200. It pulled back to 8,200. That was about a $1,000 pullback. And then we broke above 9,200 recently. And that projected a measure move extension of about $1,000 equal in size to that pullback, which takes us up to about 10,200, which is no coincidence kind of where we've gotten to at this point. So now we're coming up into this resistance. The market is on a daily chart, technically overbought, trading above an RSI level of 70. And so while we could see it push up a little bit more right now, I wouldn't at all be surprised to see a little bit of profit taking and a bit of a consolidation before the market considers the next big leg higher.
All right, and let's pull this out to the macro picture at the moment, because while last week we were discussing the distinct impacts of the coronavirus that was having a downward pressure impact on a lot of global equity markets, that narrative seems, at least in the short term, to have dissipated, particularly looking at Western markets over to the US, where there have been some record highs on the Dow. Nasdaq pulled up massively by Tesla, which saw record runs over the previous week. Has the global picture moved on from coronavirus for now? Is that short-sighted? And do you think that there will continue to be the sort of record-breaking booms that we're seeing in global equities?
So I think it's too early to say that the market has moved past the coronavirus. I think that we continue to see back and forth headlines as far as what is going on, and it's hard to kind of get a good picture read of what's going on exactly out of China. There have been a lot of disturbing headlines about what's been going on in China and the amount of deaths that have been the death toll continues to rise. But that appears to be being offset by a lot of intervention on behalf of Chinese authorities. We've seen the PBOC step in to offer support to markets. The Chinese government is stepping in, committing to support the markets and offer liquidity. And that is consistent with the theme that we've seen over the past decade when it comes to any downside risk in the global economy that extends right over to the United States and the Federal Reserve and government stimulus that's being applied and central bank policy accommodation to basically direct the market to continue to shrug off downside risk at every turn and to continue to focus on propping up risk markets so that people will feel good and that hopefully it will trickle down into the real economy. So whether or not coronavirus is the trigger, it certainly, as I've said, is not going to be the cause of what is an expected capitulation in the global equities market. But as far as coronavirus specifically goes, we're still in it and we're still getting details and we're not out of the woods just yet. And that could still be the trigger that kind of shakes up the market.
Right, so I mean, to sort of pare that down, I mean, are you effectively saying that the market resilience comes from the fact that they have been so coddled when it comes to sort of risk by these government interventionist policies that have taken place over the last decade, that resilience is just another shrugging off? Yes, there might be another global concern, but we know that our government safety nets will be there to catch us and provide the stimulus that's needed to keep these markets ticking over. Is that the sort of mindset that is sort of taking control in global financial markets at the moment?
That has been the mindset that is and strategy that has been implemented for, again, over a decade now. It's a strategy that came into play back in 2008 at the inception of the global crisis, a strategy that said we need to be able to get ourselves out of this. And in order to do that, the strategy should be that we are going to need to direct investors into risky assets and do so in a way where investors are effectively to the point where they are recklessly invested in risky assets in order to look to direct that through the equity market, and a market that everybody looks at as far as a key sentiment indicator. And if you can rally up the equities market and the equities market can remain robust, strong, and healthy, that hopefully these things will trickle down and into help and alleviate stress within the real economy. But again, that is a tremendous risk that central banks and governments have taken. And it isn't without some sort of kind of a reckoning that I suspect will happen at some point sooner than later.
All right, then with reckonings in mind, I want to pull this conversation back quickly over to Bitcoin and actually ask the question, because we've had, as we hit that $10,000 mark yesterday, we've had a number of analysts come out, analysts or pseudo-analysts, depending on who you consider, coming out and making all sorts of wild and woolly predictions for what they see as the ultimate endpoint of this particular bull run on Bitcoin. Now, we had the likes of Anthony the Pompliano come out and say 100,000 by the end of December 2021. We had Tom Lee of Fundstrat come out and say 27,000 in the next 6 months. And even our very own technical analyst Joe Saz came out and predicting a whopping 300,000 by the end of this next hype cycle. Joel, are these wild predictions just speculative nonsense, or is there some grounding in it? And where would you say you see this sort of bull run leading us to?
I don't think the expectation that Bitcoin is going to appreciate significantly is a wild expectation that isn't grounded in legitimate fundamentals and compelling fundamentals. I think that we have to continue to ask ourselves, do we think that Bitcoin will be around over the coming years? And if the answer is yes, then it's crazy not to think that a currency, a new asset like Bitcoin that is going to exist is in such a limited supply and in a decentralized manner, again, at a time when it should be increasingly attractive where we are at in the global economy, it shouldn't be at all a surprise to see that such an asset has the ability to appreciate significantly. Now, as far as projections go, again, it isn't an easy game to be pinpointing where markets should go, but I do expect it to appreciate. And in my view, I wouldn't be at all surprised if towards the end of 2020, we're seeing the market kind of trying to establish up back into the 15,000 to 20,000 area, if not trying to push through to a fresh record high.
All right, certainly could be an exciting time to see how that plays out over the year 2020 and beyond. Joel Kruger, I want to thank you so much for taking the time to help break down the complex web of global markets, both digital and otherwise. So for those at home, keep watching at blocktv.com for the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.